Hey everyone, welcome back. So today is Monday. It is a bad freaking Monday. Bitcoin is obviously down. It's continuing to go down right now. It's at 20,888, 20,900. Ethereum is continuing to go down. It's at 1100 right now. And it obviously all started with, I think from last week, the news that came out for the CPI data on Friday, which was at 8.6. Didn't help. So we were, falling over the weekend, and then we obviously had the news from Celsius Network yesterday saying that they're halting trading, swaps, everything. So we'll get into that a little bit, but we'll get into the miners here, Bitcoin as well, see how they did today. The only good thing is that I can say is I did buy the dip. I bought 222 shares of CleanSpark at 445, and then I bought 750 shares of Bitfarms at $1.35, which I got lucky at that end. All right, so as always, not financial advice. You guys know the drill here. I'm investing in following coins and companies. So I've been dollar cost averaging into these companies as the price has been falling down for the past several months. And it is rough. You just don't know when it's going to end. And, hopefully I have more cash that I can put into it a little bit. But I pretty much wiped myself out right now with what I bought today. So we'll see how things progress. I don't know if we're obviously in the bottom, but as you can see here, Bitcoin is at 20,932 right now. This was the line that I talked about in yesterday's video, where I said Bitcoin at that time looked like it was going to pop a little bit and then fall further, and it did fall further. It obviously didn't stop at the line that I thought it was going to stop at, which was the 23,900 mark or so. It continued on throughout the day. Let's go into the daily here. So we obviously continued falling through it. We did kind of battle a little bit on that line, which you can see here. We tried breaking above this line here a little bit during the day on the 1 hour chart. That's 23,000, what is that, 23,800 or so. But it was obviously denied, and we continued falling. So when I uploaded the video, this was back right around here, I believe. That would have been, nope, right here. So I think I was talking about it right around here. I said we may go up a little bit, which we did, and then we continued falling down, which was obviously the case here. And we're falling down further. So looking at it right now, obviously the RSI is way oversold on the 1 hour chart. We are way oversold also on the 4 hour chart. And we are way oversold as well, on the daily chart right now. But it looks like our possible next support might be at this red line here, which I just drew in today, which is right around 19,500, give or take a little bit. And this is because of, let me see if I can go back far enough, and we'll go on to the weekly chart here. It goes all the way back here to November of 2020. And we did have a little bit of some action here at that line going back. We had the same action kind of here as well. So let's go to the daily chart. Where was it at? It's a lot of days. Where am I at here? June, there we go. Okay, so we're looking at here, we have a couple bounces off this line here, so that might act as support. We'll have to see. It's also right about where we hit the peak in 2017 with Bitcoin, right around 19,500 or so, give or take a little bit. But that might be our support going forward here at least. If we do continue falling down, obviously, today and tomorrow, possibly, that's where we may end up at. And if we go below that, well, I think MicroStrategy and Michael Saylor are going to be in a world of hurt. So they're going to have to obviously put down more collateral for their loans in order not to get margin called. So we'll see what happens there. And I think I just saw someplace that the SEC is looking into, obviously, MicroStrategy, and they're looking into Celsius Network as well. So that'll be interesting to find out. So obviously, Bitcoin is where it's at right now. It's at 21,000. I think the way that we are falling right now, I think we're going to possibly continue falling down. But I wouldn't be surprised if we get a little bit of a relief rally here, possibly trying to bounce back up to this resistance here at 23,800 or so. But that's just kind of my thinking. If that doesn't happen, we're obviously falling down. So it doesn't really matter. So it was a bad day. Obviously for Bitcoin, we fell. How much did we fall today? We fell about 15% on the day. That was between Sunday and today. Between Saturday and Sunday, we fell 6%. And today we've fallen already 6.6%. So we've fallen quite a bit here in the last couple of days here. Since June 6th, we have fallen already. Let's see here if I can, right there. We have fallen 33% in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. In about 2 weeks, we've fallen 33%. We're obviously way down from the top. From the top of it, we were back here at 67,000, roughly right around here. We have fallen all the way down here. We're at 70% roughly. If we go down to the 19,500, we'll be at 71, 72% down from that. If we go like previous bottoms in the markets, we could go down to maybe even the 15,000 mark range around here. That's 77%. If we go any further, we're at 80%, would be at 13,000, which kind of coincides with my bear market projections that I did in January, where I said possibly we might be at 13,000 by the end of the year. But we'll have to see if that actually plays out or not. I don't think we're going to go that far. I hope not, but you never know. So obviously be cautious out there. On that one, Ethereum tanked even harder than Bitcoin did. I think that's because it was used with the cellulose network. They were using it quite a bit for yield farming. And let's see here, Ethereum was down 15% from yesterday to today, and it's also down another 8% right now, and it has fallen quite a bit here in the last couple of days. Some are saying that we could possibly be at, finishing it out at about $800 or so before it's all said and done. So that's 45% drop in the last, last 15 days or so. So the last 2 weeks we're down 45% on Ethereum, which is rough. So that's both of those guys. We'll see what happens. Obviously, Bitcoin is going to be interesting here. We'll see if we can keep this support here, or if it falls below it. If it falls below it, we'll have to take a look at it again. But that's where I'm at right now with it. All right, let's take a look at the miners, see how the miners did, and then we'll get into a story on the cellulose network. Where is it? There we go. So here are the miners. I believe most of them have reached new all-time 52-week lows. So Annie was down 15.69% today to 75 cents. It's up a little bit in the after hours to 76 cents, but not much. I mean, 0.16% up. And it is a new 52-week low for them at 73 cents. We got Argo. Argo hit a new 52-week low as well. It's at 46 cents. It was down 14.81%. Bit Digital was is at $1.23. It was down 13.38%. It hit a new 52-week low at $1.20. Bitfarms was $1.34 today, down 15.72%. Like I said, I was able to buy it at $1.35 with like half an hour left to go in the trading session. I put that order in the morning. I didn't know whether it was going to go through. It was bouncing a little bit, but it did actually go through. So at least happy about that. I was actually dollar cost averaging pretty low on that. We'll see where tomorrow goes. Obviously, with Bitcoin going down below 21,000 right now, I think the miners are going to be hurting even more tomorrow. So we'll see. But they obviously reached the 52-week low. They're down a little bit more in the after hours to $1.31. CleanSpark is at $4.46, and it was down 8.98%. Like I said, I was able to get them in at $4.45 pretty early in the morning, so that worked out as well. They are up a little bit in the after hours to $4.54. Also reached a new 52-week low of $4.28, and that was right at the right when it opened up in the morning for trading. It was pre-market trading that pretty much brought it down. Coors was down 13.3% to $2.02. It also had a new 52-week low of $1.97. DigiHost was down 23%. It did not reach the new 52-week low, which it reached back here. This was on 5/12, but it got pretty doggone close to that. It was $1.27. So it was down 23%. DMG was down 21% to 21 cents. It reached a new 52-week low of basically 20 cents. Hive was down 13.86% to $2.92. Reached a new 52-week low of $2.87. Up a little bit in the after hours to $3. And then we got Hut 8 was down 12.23% to $1.65. Up a little bit in the after hours, but also reached a new 52-week low of $1.56. Iris Energy reached a new 52-week low at $4. and it ended up at $4.06, down 15.77% during the day, down a little bit more in the after hours to $4. Luxfolio was down 22.22% to 10 cents, 10.5 cents, and it bottomed out at 10.5 cents for the 52-week low. And then we got Marathon. Marathon was down 11.8% to $6.65, down a little bit more in the after hours to $6.51. It reached a new 52-week low as well at $6.12. Mawson was down to $1.75 on the 52-week low today, which it reached. It's down to $2.10, so it was down a little bit, 0.47, which is surprising that they didn't tank like the rest of the miners did. And then Rye Blockchain was down 10.06% to $4.65. It reached a new 52-week low today, $4.36. It's down a little bit now in the after hours to $4.60. And finally, Stronghold was down 10.34% to $2.08, up pretty nicely in the after hours to $5, up 5.77% to $2.20. It did not reach a new 52-week low, which it reached back here on May 12th as well. So obviously, the miners got really reamed today. Obviously, we're seeing everything pretty much 15% or more, or at least 10% or more on the miners. They were really battled down today. Bitcoin obviously fell, so it's tough. It's going to be a tough summer if this continues on the way it is. We'll see how it goes. Hopefully, we're getting close to the bottom, but we just never know. We got the Fed on Wednesday going to be providing as far as what they're going to be raising interest rates to. Some are speculating that's going to be 75 basis points. We'll see if that happens or not, or if it's going to be 50 basis points. I'd almost prefer to see like it's going to go to 100 basis points. Just shock the system, get it out of the system. That way people go like, okay, now we can finally start going back up a little bit. But we'll see. We'll see what happens. It's not easy, and I know it's tough for me too. It's kind of like, you're throwing good money at bad money kind of like thing. But if you have the mindset of going into it for the long haul, you know that this is the right time to be buying, especially in down markets. This is when the biggest gains can be made. And as long as Bitcoin doesn't go to zero, I think we'll be okay with the miners here. All right, so let's take a look at Cellulose Network, see what the heck happened there. And I'll provide you guys some links also to some of these articles here. They're pretty lengthy, some of them are. So you can actually read them at your own leisure, but I'm just going to go over the main things here. So Celsius obviously provided this. This was back yesterday. So here's what they wrote. We are writing with a very important message for our community. Due to extreme market conditions, today we are announcing that Celsius is pausing all withdrawals, swap, and transfers between accounts. We are taking this action today to put Celsius in a better position to honor over time its withdrawal obligations. Obviously, anytime you have any entity do that, that's obviously a red flag. They're obviously scrambling to get money out to people, and it's basically a run on the bank kind of system that's happening with Celsius. So that's never a good thing. Continuing on here, acting in the interest of our community is our top priority. In service of that commitment and to adhere to our risk management framework, we have activated a clause in our terms of use that will allow for this process to take place. Celsius has valuable assets, and we are working diligently to meet our obligations. We are taking this necessary action for the benefit of our entire community in order to stabilize liquidity and operations while we take steps to preserve and protect assets. Furthermore, customers will continue to accrue rewards during the pause in line with our commitment to our customers. We understand that this news is difficult, but we believe that our decision to pause withdrawals, swap, and transfers between accounts is the most responsible action we can take to protect our community. And I gotta chime in here. It's not to protect their community, it's to protect their own butts, unfortunately, which is the sad part here. Continuing on here, so we are working with a singular focus to protect and preserve our assets. To meet our obligations to customers, our ultimate objective is stabilizing liquidity and restoring withdrawals, swap, and transfers between accounts as quickly as possible. There is a lot of work ahead as we consider various options. This process will take time, and there may be delays. We thank the incredible Celsius community for your support today. It is our pleasure to serve you. Our operations continue, and we will continue to share information with the community as it becomes available. So that's never good, all right? I've never gotten involved with any yield farming or anything like that. I've always been very, very cautious when it comes to my Bitcoin, my Ethereum, whatever I hold. I've actually today moved everything that I had. I wouldn't say everything. I moved Bitcoin and Ethereum off of Coinbase. I've had about half of it in Coinbase, half of it in cold storage. Today, I just moved everything over. I'm like, I don't think Coinbase is going to be in trouble. They've been through this bear market before in 2017. I never lost any of my coins, never got hacked or anything like that. I think Coinbase is a reputable business, but it's just a peace of mind knowing that my coins are in my wallet and they're secure, right? They're off the exchange. They can't get hacked. They can't get liquidated or whatever. If something happens to Coinbase for whatever reason, Bitcoin goes down to zero. If Bitcoin goes down to zero, it doesn't really matter because my Bitcoins that I have in my hardware wallet is worth nothing anyway. So it's kind of, what the heck, right? So at that point, it's game over. It was a fun couple-year ride. But we'll see. I don't think that's going to happen. So I just wanted to move everything over. As far as yield farming, I thought it was a little bit too risky. Whenever somebody promises 8, 10, 12, 14% annual return on something, it's a little red flag. Especially this early on where we are with this ecosystem with DeFi and all this stuff. I think it's just too early to get involved into it. There were times where I was thinking maybe just put in $1,000 just to see how it goes. But I didn't do it. I had friends that did it for a little bit. And, obviously when they were getting the returns, they were happy with it. But eventually they did pull out, once market started going down and south. So my only caution is to anybody that does have Bitcoin, Ethereum, any Cardano, whatever, be very, very cautious with your coins. That is kind of like you're handing over somebody a huge chunk of change and going, protect this for me and I want to make interest on this, right? That's the same kind of principle there is you wouldn't hand somebody over $50,000, for them that's on the internet. So don't do the same thing with your coins. Your coins are like hard dollars. If you had it in your wallet, in your bank or something like that, you wouldn't give it out to just anybody. You would want to make sure that it's a reputable source, registered, everything all like that. So be very, very careful with that. Get your coins off of the exchanges or wherever they are. If you are yield farming anywhere, I would recommend get it out. Right now, we're just in unknown territory with all this stuff. There may be other players that are going to fall, unfortunately. And as we've already seen Terra Luna fall, we're seeing possibly Celsius if they can't get their act together here and come up with the basically liquidity that they need in order to get coins off of their service. And just be careful out there. All right. So I just wanted to do a quick PSA on that. And let's get into the story here on Celsius. So Celsius, obviously, price was at a high of $7 last year. It has continued falling down, so it's down to, what is it now, 27 cents. So it's down substantially. From that point, it's down pretty much, almost 90% down from the $7 that it was at or so. And then here's a good story from The Verge. So crypto lending giant Celsius halts withdrawals. Celsius has not said what it plans to do next. And there were a couple of interesting links in here that I'll also point out to you guys that we'll get into. So the Celsius network, which is one of the largest crypto lenders, announced Sunday night that it was pausing all withdrawals, swap, and transfers between accounts. It has 1.7 million customers. That's a lot of customers and a lot of change that they obviously were controlling. The company's token, the CEL, is trading at 23 cents as of writing. According to CoinMarketCap, which is what we just looked at, that's a 92% decrease from April 8th when CEL was worth $3. The token was worth nearly $7 a year ago, so that's obviously, if that's a 92% decrease, we're looking at close to 95, 98% total decrease from where it was. Let's see here. There have been some questions about Celsius Network's high yields in connection to failed stable coin Terra. So if you go to the article, you can check that out as well, and its reserves. The value of its assets on its platform dropped by half to $12 billion in May from $24 billion in December of 2021. Between March and May, $1 billion flowed out of the system, the Financial Times reported. And in a June 7th blog post entitled "Damn the Torpedoes," the company said Celsius has the reserves and more than enough Ethereum to meet obligations as dictated by our comprehensive liquidity risk management framework. Obviously, that wasn't the case because they shut you out of your own money over the weekend here on Sunday. That was obviously on June. That was then, and on June 12th, an email to customers started off with this, which we came into it. So, due to extreme market conditions, today we are announcing that Celsius is pausing all withdrawal, swaps, and transfers between accounts. We are taking this action today to put Celsius in a better position to honor over time its withdrawal obligations. Okay. Continuing on here. In theory, Celsius works in much the same way as an ordinary bank does, except cryptocurrency. It collects deposits and then loans them out. An advertisement on Celsius site, as of this writing, was offered at 18.63% annual percentage yield on crypto deposit. Let that sink in. Where in the world are you going to get 18.63% on anything from the banks? You're not. You're going to get, maybe if you're lucky, you're going to get 1 percentage point. But you're not going to get that anywhere. So that's almost too good to be true. And, obviously the markets have been going up, they've been going down. It's going to be really hard for them to generate that kind of return month in, month out. So that, to me, is at least a red flag. Unlike a bank, Celsius doesn't have FDIC government insurance that protects people in case of bank failure. So that's the other part of it, right? And then skeptics have repeatedly warned that Celsius Network is bound to fail. Some have even argued that Celsius is a Ponzi scheme. And I'll provide you guys with that link there. It's actually a pretty interesting article. I don't know how much of it is true, how much of it is false, only going by that article, but you'd have to dig into it really hard to figure all this stuff out, and I just don't have the time for it. But because of its size, Celsius touches a lot of other parts of cryptocurrency markets. For instance, Celsius Network borrowed $500 million from Tether, the dollar-pegged stablecoin, and the loan was originally $1 billion. Bloomberg reported the loan is collateralized in Bitcoin. If Bitcoin drops, they give us a margin call, and then we have to give them more Bitcoin, Celsius CEO Alex Machinsky told Financial Times last year. Obviously, I think this is the problem that they're running into. I don't know where their margin call is, but I also saw someplace, I think it was on Twitter, somebody said that they are adding collateral to that loan in order to bring down the margin on it, lower it. So I don't know if that's even true or not, but something you may want to look into as well. I might dig into a little bit more this evening if I have time. Even investors who aren't directly involved in cryptocurrency have exposure to Celsius. Connect's second largest pension fund, Casa de Depot at Placement du Quebec, I'm hoping I'm pronouncing that right, invests as part of a $400 million equity round for the company. Ouch. Hopefully that pension fund, gets made whole here by this, or if they already pulled out part of their money or what's going on there, don't know. And then regulators have expressed interest in Celsius Network operations. On September 17th, 2021, alone, New Jersey issued a cease and desist order to Celsius Network. Texas also scheduled hearings. Alabama inquired. And New York Attorney General Lida James included the company as one of the platform's requests to provide information on its activities and products, right? And Celsius said it was working with regulators for that. Also, when the DeFi platform Badger Deo was hacked in December, blockchain activity showed Celsius Network lost $54 million worth of crypto. Celsius claimed client and user assets were not affected. In its note to customers, Celsius said the company's ultimate objective is stabilizing liquidity. It did not give a date for when customers might expect to be able to withdraw. Again, warning that this process may take time. There may be delays. So there's obviously some red flags here with Celsius. It is unfortunate. Obviously the promise with Bitcoin and crypto in general is DeFi, getting possibly rid of the banks and the middleman and everything else. But we need to have, I think, fundamental regulations in order for that to take place. We need a way that whatever they're doing can be audited. Everything can be audited. It shouldn't be just what's available on the network or anything like that. Everything has to be audited. And it has to be obviously signed off by an auditor by that. I think that's the only way we're going to get trusted on, or if it's completely decentralized, which it doesn't look like Celsius was completely decentralized, I think. If you do loans between people, let's say I have one Bitcoin, I'm going to loan you a Bitcoin, or I'm going to loan you something in return, but we have a smart contract that says you're going to pay me this, and you have something in collateral that if you don't pay me, I'm going to get that in return, right? So something like that. I'm just brainstorming ideas out here. But here's also something interesting. So this is from the article, and this is from a blog post, I think, from Substack. This is Rority's newsletter, the biggest Ponzi crypto lending company in a massive Ponzi scheme. Worth the time to read it. I'm not going to get into it here because I haven't had time, and I don't know this gentleman or this person. So it's worth a read. Take it with a grain of salt, and always do your own research as far as anything that's in a blog post. But the interesting part here that I found, and it was an interesting read in general, but here are some common red flags. So this is a Bitcoin Ponzi scheme. In a recent case, the SEC versus Shavers, the organizer of an alleged Ponzi scheme, advertised a Bitcoin investment opportunity in an online Bitcoin forum. Investors were allegedly promised up to 7% interest per week, and that the investment funds would be used for Bitcoin arbitrage activities in order to generate the returns. Instead, the invested Bitcoins were allegedly used to pay existing investors and exchanged into US dollars to pay the organizer's personal expenses. And here's some common red flags. I think this is probably from the SEC coming out. So many Ponzi schemes share common characteristics. Following are some red flags. High investment returns with little or no risk, right? So keep that in mind. Overly consistent returns. That's another one, right? Which is something that obviously Celsius was promising. Consistent returns. Unregistered investments, so obviously they're not registered with anybody. Unlicensed sellers. So federal and state securities laws require certain investment professionals and their firms to be licensed or registered. Many Ponzi schemes involve unlicensed individuals or unregistered firms. And then secretive and or complex strategies and fee structures. Right, so that's being able to look inside the books, being able to see everything that they're investing in, who they're lending money out, everything. And if you don't have access to that, then it's kind of a little iffy. No minimum investor qualifications. Most legitimate private investment opportunities require you to be an accredited investor. You should be highly skeptical of investment opportunities that do not ask about your salary or net worth. I think in crypto it's a little bit different because you're actually giving somebody your crypto and then you're supposedly getting yield on that. Issues with paperwork. So be skeptical of, or excuses regarding why you can't review information, right? Difficulty receiving payments. So up to this point, people have been getting payments and they have been able to cash out. But as Bitcoin has fallen in value, they're obviously having a harder time, and people are starting to pull those funds out. So they're obviously having a liquidity crunch. And it comes through someone with a shared affinity. So obviously somebody in the crypto space that, you know, we obviously, we want to have less banks. We want to DeFi. We want to do all this kind of things. And it's kind of one of those things that kind of gets people motivated and possibly to also obviously provide their funds to them for the returns possible. So that was part of that article or that blog post here. And then also this article here by Bitcoin Magazine. Celsius halts Bitcoin withdrawals. What went wrong? Good article as well. Pretty good deep dive. But I don't think that's everything that we know about it. I think it's just parts of it that have seemed to have gone wrong with it. So I just want to point that out to you guys. So as always, please be careful out there. I know most of you guys, I think, are investing in the Bitcoin miners, which I talk about all the time. I also talk about Bitcoin. So if you do have Bitcoin, Ethereum, any kind of cryptos, be careful out there. And as the saying goes, not your keys, not your coins, right? So if it's in your wallet, hardware wallet, whatever you got, off the exchanges, off wherever you keep them, those are yours. Nobody can touch them, and you won't lose them. Obviously, if they go down to zero, it doesn't really matter. But that's it. Be careful out there. We'll see how tomorrow looks like. Let's take a look at Bitcoin here really quick as well, see what it's doing. So it looks like it's picking up a little bit here in the last couple minutes. We are at 21,100. Let's look at the 1 hour chart on it. And we are going up a little bit. We'll see. We'll obviously see how that comes out. So I hope you guys have a great evening, great Tuesday tomorrow. We'll see how things go for the miners. We'll see how Bitcoin goes. Hoping we're getting close to the bottom, but we'll see. All right. So that's it. Thank you so much for watching. Hope you enjoyed it. If you did, please consider subscribing, hitting the like button and the notification bell. That's it. That's my only ask from you guys. Have a great day. I'll see you in the next one. Bye.